Hello class, in this lesson we will continue with the general journal. Today we are going to look at how to record transactions into this book. For this lesson you will need your cash book and your textbook. But first, homework answers, where you have to identify the purpose of all the books of first entry. Cash book records all cash and bank transactions, that is money received and money paid. Petty cash book records all small cash payments and petty cash receipts. Debtors journal records all credit sales of goods. Debtors returns journal records all goods returned by customers. Creditors journal records all credit purchases of goods bought for resale. Creditors returns journal records all goods returned to suppliers. And lastly, the general journal records all transactions that do not fit into any other book of first entry. Topic quiz. Take 2 minutes to answer the following questions to see if you understood the previous lesson. Write your answers on a separate paper or page in your exercise book. Identify the double entry, account to debit and account to credit of the following transactions. Number 1. The owner took goods for personal use. Number 2. Donated an old vehicle. Number 3. Wrote a debtor Tim's account of as irrecoverable. Charged interest on the overdue account of John, also a debtor. 5. A creditor, bulk traders, charged interest on the overdue account of the business. Bought equipment on credit at office equipment. Pause the video now. Topic quiz answers. Number 1. Debit drawings and credit purchases. Number 2. Debit donations and credit vehicles. Number 3. Debit bad debts and credit Tim. Number 4. Debit John and credit interest received. Number 5. Debit interest paid and credit bulk traders. And then number 6. Debit equipment and credit office equipment. We will now look at examples of the first 3 different transactions recorded in the general journal, and in the next lesson we will look at the rest. Drawings of goods for personal use examples. On the first, the owner took goods, cost price $300 million, selling price $500 million for personal use. Remember, the account to debit and account to credit must always be with the same amounts, and we always start with account to debit. So General Journal of EIS, June 2020, GJ1. On the first, debit drawings for $300 million, general ledger account, and credit purchases $300 million, and then you also write your narration. So there will always be 3 entries: the account to debit, account to credit, and your narration. And after you've completed with the entry, you draw a line. One more example. On the second, the owner took stationery for personal use, $100 million. Account to debit is still drawings, $100 million. Account to credit, what was taken, stationery, $100 million, same amounts. And then your narration, the owner took stationery for personal use. Number 2, we're going to look at donations of goods or assets examples. On the third, donated goods to local church, cost price $700 million, selling price $1,000 million. So on the third, debit donations with $700 million and credit purchases with $700 million. And your narration, donated goods. Remember, we will always record these transactions at the cost price of the goods that were donated or taken. The fourth, donated all the equipment to school, $800 million. So account to debit on the fourth will still be donations, $800 million. And account to credit, what was donated, equipment with $800 million. And your narration is donated old equipment. And the third one for today, bad debts examples. Jim disappeared. His account of $200 million should be written off as irrecoverable. Account to debit on the fifth, bad debts, $200 million. Account to credit, Jim, the debtor, $200 million. Take note of the folio number for Jim. It's not GL like for bad debts, because debtors' folios are always DL for debtors ledger. and then you write your narration, account written off as bad debts, and you draw a line. One more example. On the 6th, a debtor, John, owes the business $100 million, but he was declared insolvent. Received 20 cents in the dollar via EFT from his estate and write the balance off. 20 cents in the dollar means that for every dollar John owes, the estate will pay 20 cents. That is basically 20% of the debt that will be received and 80% that should be written off as a bad debt. This transaction will therefore split into two different transactions. So John's debt, $100 million, splits. First part, 20% that was received in bank. This is treated as a normal receipt from a debtor. 20% of $100 million is $20 that is received in bank. That is recorded in your cash book. The other part of this transaction, the other transaction, is the 80% that's left after 20 cents in the dollar was received. That's 80% of the debt that should be written off as bad. That is $18 million bad debts, and this is recorded in the general journal. Account debit, bad debts. General ledger account, $18 million. Account credit, John the debtor. Debtors ledger account, $18 million. Your narration, part account written off as bad debts. And then remember, the rest of the money, the $20 million received from the estate, will be recorded in the cash book. Homework. Exercise 5.1, page 95. In your cash book, you only need one page, not 2 pages like when you do a normal cash book. Remember to draw a line after each entry. If you struggle, just look at the examples again. Good luck.